What is up, traders? Welcome to the official Trade Talk channel where I teach you how to analyze price for the most consistent and higher probable entries so you can become a better trader. Today we're going to discuss bear traps and bull traps, also support and resistance. It's important to understand what my style of support and resistance is, this way that you can understand what is a trap. Basically, what a bear trap is when you have a support level that gets breached, a close below. Resistance and support should be drawn from your highest bullish close as resistance, and for your support, you should be looking for your lowest bearish close. If this video gets a lot of questions about how do you do support and resistance, then maybe I will do a video like that in the future. So the way that I do support and resistance levels is I use the very close of your bullish candle on a daily time frame, or for support, I use a bearish close on a daily time frame. So here you have until that level is broken. So here you have a bearish candle. There is your close. So the reason this was support is not only because of that close, it's an objective level. The reason I use support and resistance like this is because of objectivity. I do not want to use a subjective level for where potentially support and resistance can be. I want an objective price point. I want the exact price where support or where resistance is, and by using the close of your bullish candles for resistance, your close of your bearish candles for support, you have that objectivity. You know where support is until broken. So the first one we're going to go with is a bear trap. All right, a bear trap is when you take out a support level and then reverse, go back in the opposite direction. This will occur in bullish trends. Usually what this is doing is it's basically trying to draw traders off sides, break out traders or break down traders, people that want to see a close below a support, so that way they can then take an entry for the bearish continuation. I do these kinds of trades myself, but typically I'm doing them in the direction of the trend. And that's the difference. Here you can clearly see that Bitcoin is in a bullish trend. This is nothing more than your like a pullback, right? You have an impulse, corrective phase, slight impulse, another corrective phase. This candle here told us everything we needed to know about continuation. Basically what occurred is you got a close below support, a deeper stab, and then a close. Next day, people bought it, and the range went completely above and engulfed almost this candle. Now, you didn't take out the low of this candle, but what is important is this candle shows you that price is willing to close below support. This candle shows you that this candle was a trap because this candle had everybody stuck, and that's why you've seen such a bigger bullish range right in front of a bear trap, or right after a bear trap. So it's important when you're looking to take entries, the higher probable entries, is to wait. If you think you know what's going to happen, wait longer. Resistance would be this bullish candles close because it's the top of the range. It's because these candles, these daily candles here, respected support and resistance. You were unable to close above, you were unable to close below until here. So this is an entire week. 1, 2, 3, 4, 5, 6, 7 days of price action that was range bound. Once this occurs and we get to close below, we will be watching old support to see if we get rejections there. If you go into a smaller time frame chart, which we can't this far away, but if you do, what you're looking for is you're looking for closes above on an hourly or 4-hourly basis. You would have gotten that here. So that would have told you not to take the short, but instead wait. Once you get to break out above resistance, then you can watch your old resistance level to see if price respects it, and it does multiple times before you finally get your bullish push away. I did cherry pick this example because it's the perfect example. It shows a bear trap and it shows resistance and support holding, and then the trend continuing. Like I said earlier, Bitcoin is in a bullish trend here. You've only got a few days of pullback, a couple weeks of pullback. That's nothing in the land of the trending. Now, if you got a couple months of pullback, that's different, right? We're talking about a couple weeks. This is like 3 weeks, and the ranges are not very big. It's kind of a small range. Well, to be fair, it is about an $8,000 range, but that's Bitcoin, right? But anyways, the resistance did hold, and it held on a closing basis. So basically, if this bearish candle right here would have closed back below this resistance level, then we would have to wait again, because what that would signify is that we're probably going to continue with more range bound price action. But since you closed back above, you could have looked for bullish entries anytime on this daily candle here, which would have been good. Wait for the entry to get back above resistance for your bullish entry. Look for 2-to-1 risk to reward setup. So yeah, that's basically that. Let's go on and into this stuff over here. Let's see if we can find a bull trap. And we do have one right here. So now something is different on Bitcoin, right? This was when everybody was calling the Wyckoff top, or the 3-drive topping formation, the distribution pattern. And it does indicate that, right? You have new all-time highs, and each high is insignificant from the other. That indicates that you're not getting a short squeeze. Rather, there's not much demand above the level. So that's what causes this 3-drive topping formation, and bigger funds are selling into that. Over here is when the buying or the demand was exhausted and we got a massive rip to the downside, taking out multiple swing lows. Those are support levels, right? You took them both out before finding support here. That support comes from this bearish candle right there. All right, so that would have been your support until this candle here. But let's not get too sidetracked. Let's go over here. So this is your highest bullish close in this range right there. Not this one, but your doji here. That's the highest one. Notice how price stays trading below it on a closing basis until you get to this bullish candle here. Now also, what's important to understand is you also got a bear trap here. So this was a little bit of a difficult trading range because of this close below. However, once you got back above the candle, then you would have been looking for bullish opportunities. And this is where everybody got offsides on Bitcoin. There's your bull trap right there. You know it's a trap when you take out the low of the trap candle. So the trap candle will be the candle that breaks out above the resistance. You will know that that candle is a trap when that candle's low is taken out. Here you take it out with just a wick, but the very next day you take it out with a close. So that lets you know right away that this is a bull trap, and what you will be looking for instead would be shorting opportunities either at the resistance level there or at the open there, because the open is where supply is. The reason that we know supply is above this is because price traded away from it. That's everything. To a trader, it tells us everything. Not only did we break out above resistance, but we declined 2 days and then put in a bearish engulfing to the downside. That means that there was more supply up here than demand. If it were the other way around, price would have been making higher highs and higher lows. So when price traded back into this area, which it did here, this would have been the area to look for a short side entry because of your bull trap. All right. Hope this video helps, guys. Bull traps, bear traps, support, resistance. It's really a few of the most important things that you need to learn as a retail trader. If you're going to study price, you need to know these things. If you have any questions or comments, please drop them down in the comment section below as I try to answer every single one of them. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.